End of Dollar Appreciation by www.forexconspiracyreport.com. After a year of angst about the Fed raising interest rates and driving the dollar up, we are now hearing the experts talk about the end of dollar appreciation. Bloomberg Business reports that UBS Group AG is telling its clients to prepare for dollar rally's end this next year. Money managers for Asia's wealthiest families say they'll be looking elsewhere for returns after chasing the US dollar's gains in the past 3 years. UBS Group AG, the world's largest private bank, is telling clients there's little room for further dollar appreciation, said James Purcell, cross-asset strategist at its wealth management business in Hong Kong. Stephen Diggle, who runs a family office in Singapore called Vulpes Investment Management, said U.S. rate increases aren't enough to chase a strong dollar. Stamford Management Pte, which oversees $250 million for Asia's rich, will review its outlook for greenback gains after expected advances in the first quarter, said Jason Wang, its chief executive officer in the city. Strategists also predict the dollar's gains will slow in coming months after the Federal Reserve committed to a gradual pace of tightening. The currency will appreciate about 5% to $1.05 per euro by the third quarter of 2016, according to a Bloomberg survey, after surging 10% this year. Its advance versus the Japanese currency will be limited to less than 4% to 125 yen, after gains slowed to about 0.6% in 2015 from more than 10% in each of the previous 3 years. Is this analysis correct? Are we going to see the end of dollar appreciation? The Fed expects to keep raising interest rates, but at a measured pace. Why did the panic of higher rates go away? And of course, the dollar trades individually against other currencies. The most important currencies against which the dollar trades are the euro, British pound, Japanese yen, Indian rupee, Russian ruble, Brazilian real, Canadian dollar, Australian dollar, and Chinese renminbi. The most unstable relationship for the coming year is probably the US dollar renminbi. Whither goes China and the US dollar renminbi? The Economonitor writes about hot money outflows, the US dollar and the renminbi. As China's renminbi has been included in the IMF elite currencies and the Fed has started its rate hikes, conventional wisdom sees the renminbi weakening and the US dollar strengthening as simple long-term trends. The realities are far more complex, however. In reality, the US dollar strengthening relative to the Chinese renminbi began around 2013-14, almost 2 years before joining the IMF basket and the Fed's rate hikes. Today, US tightening will escalate hot money outflows from many emerging markets, which may soon have to cope with asset shrinkages, deflation, and depreciation. After the Fed's rate hikes, the RMB's weakening is anticipated to prevail over the next 12 months, in part due to China's slower 6.5% growth target for 2016-20, in part due to the One Belt, One Road initiatives, which imply more outward direct investment from China. In November, China's foreign reserves declined by $87 billion, although the total still remains at $3.44 trillion. The point being that from the viewpoint of the US dollar renminbi, we are not going to end the dollar appreciation in the near future. The European Union and the Euro. The European Union understood too late the need to stimulate its economies and not insist on fiscal austerity to fix the effects of the Great Recession. Now, as the USA is increasing rates, the European Union is still looking to keep them low and keep printing money. ExchangeRates.org of the UK predicts a fairly stable euro to dollar exchange rate in 2016, with perhaps a slight appreciation of the euro and the end of the dollar appreciation on the scale that we have seen for the last couple of years. In accordance with CIBC World Markets, the euro to US dollar exchange rate is predicted to trend within a range of 1.07 to 1.13 in 2016. CIBC also predicts that the pound to dollar conversion will trend within the range of 1.50 to 1.61 during 2016. Analysts at ETF Securities forecast that the US dollar will strengthen over the course of 2016, but that gains will be slower as rising inflationary pressure will see real interest rate differentials narrow. After a 25% run-up versus a basket of currencies in the last few years, it is unlikely that the US dollar will continue on that course. Rather, the US dollar will likely level off with perhaps an occasional inching up when the Fed decides to raise interest rates. For more insights and useful information about Forex markets and Forex trading, visit www.forexconspiracyreport.com.